Hello all, hope you will be well. Welcome to learning video of Best of Candlesticks by StockJet.
Candlesticks contain the same data as a normal bar chart, but highlight the relationship between opening and closing prices. The narrow stick represents the range of prices traded during the period, high to low, while the broad midsection represents the opening and closing prices for the period. If the close is higher than the open, the candlestick midsection is hollow or shaded blue-green. If the open is higher than the close, the candlestick midsection is filled in or shaded red. On black and white charts, the body of the candle is filled if the open is higher than the close. The advantage of candlestick charts is the ability to highlight trend weakness and reversal signals that may not be apparent on a normal bar chart. Shadow and tail. The shadow is the portion of the trading range outside of the body. We often refer to a candlestick as having a tall shadow or a long tail. A tall shadow indicates resistance. A long tail signals support. Candlestick patterns, long lines. The long white line is a sign that buyers are firmly in control, a bullish candlestick. A long black line shows that sellers are in control. Marubozu candlesticks. Marubozu are even, stronger bull or bear signals than long lines, as they show that buyers sellers have remained in control from the open to the close. There are no intraday retracements. Doji candlesticks. The doji candlestick occurs when the open and closing price are equal. An open and close in the middle of the candlestick signal indecision. Long-legged dojis, when they occur after small candlesticks, indicate a surge in volatility and warn of a potential trend change. 4. Price dojis, where the high and low are equal, are normally only seen on thinly traded stocks. Dragonfly. The dragonfly occurs when the open and close are near the top of the candlestick and signals reversal after a downtrend. Control has shifted from sellers to buyers. Hammer and gravestone. The hammer is not as strong as the dragonfly candlestick, but also signals reversal after a downtrend. Control has shifted from sellers to buyers. The shadow of the candlestick should be at least twice the height of the body. A gravestone is identified by open and close near the bottom of the trading range. The candlestick is the converse of a hammer and signals reversal when it occurs after an uptrend. Candlestick formations. We now look at clusters of candlesticks. How one candlestick relates to another will often indicate whether a trend is likely to continue or reverse, or it can signal indecision when the market has no clear direction. Engulfing candlesticks. Engulfing patterns are the simplest reversal signals, where the body of the second candlestick engulfs the first. They often follow or complete doji, hammer, or gravestone patterns and signal reversal in the short-term trend. Harami candlestick. Harami formations, on the other hand, signal indecision. Harami candlesticks indicate loss of momentum and potential reversal after a strong trend. Harami means pregnant, which is quite descriptive. The second candlestick must be contained within the body of the first, though the shadows may protrude slightly. Dark cloud cover. A dark cloud cover pattern encountered after an uptrend is a reversal signal, warning of rainy days ahead. Piercing line. The piercing line is the opposite of the dark cloud pattern and is a reversal signal if it appears after a downtrend. Hanging man. More controversial is the hanging man formation. A hammer candlestick is a bullish signal in a downtrend, but is called a hanging man when it occurs in an uptrend and is traditionally considered a bearish reversal signal. Thomas Bulkowski tested the pattern extensively and concludes on his website that the hanging man pattern resolves in bullish continuation 59% of the time. It is therefore advisable to treat the hanging man as a consolidation pattern, signaling indecision, and only take moves from subsequent breakouts below the recent low or high. Candlestick star formations. Star patterns highlight indecision. A long body followed by a much shorter candlestick with a short body indicates the market has lost direction. The bodies must not overlap, though their shadows may. Reversal is confirmed if a subsequent candle closes in the bottom half of the initial, long candlestick body. The morning star pattern signals a bullish reversal after a downtrend. The first candlestick has a long black body, the second candlestick gaps down from the first, the bodies display a gap, but the shadows may still overlap, and is more bullish if hollow. The next candlestick has a long white body which closes in the top half of the body of the first candlestick. Evening star. The evening star pattern is opposite to morning star and is a reversal signal at the end of an uptrend. The pattern is more bearish if the second candlestick is filled rather than hollow. Doji star. A doji star is weaker than the morning or evening star. The doji represents indecision. The doji star requires confirmation from the next candlestick closing in the bottom half of the body of the first candlestick. Shooting star. With a shooting star, the body on the second candlestick must be near the low, at the bottom end of the trading range, and the upper shadow must be taller. This is also a weaker reversal signal than the morning or evening star. The pattern requires confirmation from the next candlestick, closing below, halfway on the body of the first. Candlestick continuation signals. Many candlestick clusters will resolve as continuation signals after initially signaling indecision. But there are a few patterns that suggest continuation right from the outset. Rising 3 methods. The rising method consists of 2 strong white lines bracketing 3 or 4 small declining black candlesticks. The final white line forms a new closing high. The pattern is definitely bullish. Falling 3 methods. The bearish falling method consists of 2 long black lines bracketing 3 or 4 small ascending white candlesticks. the second black line forming a new closing low.